What do we do here for calculation of capital employed? We take the assets minus liabilities, we get the capital employed. In order to calculate average capital employed, I have to deduct from capital employed, I am deducting half of current year's profit. The investment 5% tax-free government bonds 10,000. So on 10,000 if I calculate interest, I get an interest of 500 per annum. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session. In this unit 3 of session 4, let us work out one problem on valuation of goodwill. So, given below is the balance sheet of Rashmi Limited as on 31st December 2009. So, they have given us the share capital. The share capital is 1 lakh. The reserve is 40,000. The profit and loss account, the opening balance is 6,000. Closing balance is 24,000. Total profit and loss account is 30,000. Then 8% debentures 50,000. Creditors 30,000. Provision for tax 20,000. Depreciation fund 25,000. The total of the liability side is 3 lakhs. Now, on the asset side, we are given the goodwill 15,000, land 40,000, plant 50,000, investment 60,000, stock 50,000, debtor 60,000, cash 20,000 and preliminary expenses 5,000. Then they have also given us the additional information. So, the profit for the year includes rupees 3,000 income from investment. So, this income from investment, it should not be taken into consideration while calculating the profits of the company for the purpose of valuation of goodwill. So, the land and plant are valued at 1,20,000 respectively when investments are all in government securities. Compute the value of goodwill on the basis of 3 years purchase of super profits. Normal rate of return on capital employed in this type of a business is 10%. Now, what is given here? So, they have given us the revalue of land and plant. So, the revaluation of land and plant. So, the land is revalued at 1 lakh and plant is revalued at 20%. Now, if you can see here in the balance sheet, the land value is 40,000 but the revaluation is at 1 lakh. Then the plant is valued at 50,000 but the revalued amount is 20,000. Then they have also told us that the profit for the year includes rupees 3,000 income from investment. So the income from investment includes a non-trading profit of 3,000. So that we have to deduct from the operating profit and then to get only the exclusive trading profit, and then they have also given us the NRR, that is the normal rate of return. So what is the normal rate of return? It is 10%. So based on all these calculations, so we have to find out the valuation of goodwill. So we will just find out, first thing is we will find out the value of capital employed. So calculation of capital employed. What do we do here for calculation of capital employed? We take the assets minus liabilities, we get the capital employed. So we have the list of assets here. So what are the assets here? So the assets are, we can go to the previous slide. So we will not include goodwill. We will include land, plant, stock, debtors and cash. So all other things we are not including. Goodwill is not an asset. Goodwill is not, because it is a fictitious asset. Then investment is not because of the trading activity, so we will not take it into consideration. Then preliminary expenses, it is also a fictitious asset. So we don't take this preliminary expenses, investment and goodwill, and all other assets which can be sold, only those assets we will be taking into consideration. So, the land, plant, stock, debtors and cash. So, land 1 lakh, then plant 20,000, stock, debtors, cash. So, if we can see here, what is the stock value? 50,000, 60,000 and 20,000. So, 50,000, 60,000 and 20,000. So, what will be the total here? So, 1 lakh 20, 1 lakh 70, 1 lakh 90, 1 lakh 90 plus 60, that will be total asset is 2 lakh 50,000. So, this is the total assets, that is A. Now, the liabilities. The liabilities, let us see what are the liabilities here. So, the liabilities will be debentures, creditors and provision for tax. So, debentures should be taken because this amount is owing to somebody else. Then creditors, they are also outsiders to the company. And also provision for tax, it is to be paid for the income tax department. So, we take only these 3 liabilities. Then we don't take this reserve, capital and P&L account should not be taken into consideration. So, I take debentures, creditors and provision for tax. So, debentures, creditors and provision for tax. So, what is the debenture value? 50,000, 30,000, 20,000. So, 50,000, 30,000, 20,000. So, what is the total of the liability side? It will be 1 lakh. Now, we just deduct the assets from the liabilities. So, assets minus liabilities equals 2,50,000 minus 1 lakh. So, we get the capital employed as 1,50,000. So, 1,50,000 is the capital employed. So, I write here. So, the capital employed is equal to 1,50,000. The capital employed is 1,50,000. Now, we have to calculate average capital employed. So, how do we find the average capital employed? So, capital employed minus 50% of current year's profits. So, what is the profit of the current year? So, if you can see here, they have given the profit for the current year as 24,000. So, we take that profit for the current year as 24,000. Then less, see there is an adjustment here. The profit for the year includes 3,000 income from investment. So, this 3,000 income from investment, I have to deduct from the current year's profit. So, profit of the current year less profit of the year includes 3,000 income from investment. So, income from investment. So, this is non-trading profit. So, I am deducting. So, I get the profit, adjusted profit for current year. Now, I got the adjusted profit for the current year, that is 21,000. Now, in order to calculate average capital employed, I have to deduct from capital employed, I am deducting half of current year's profit. So, half of current year's profit will be 21,000 divided by 2. So, that comes up to 10,500. Now, average capital employed equals ACE equals capital employed minus half of current year's profit. So this will be 1,50,000 minus 10,500. So when I deduct 1,50,000 minus 10,500, I get it as 1,39,500. So this is the average capital employed. Average capital employed is 1,39,500. Then next step is, so we have the average capital employed here. Now the next step, this is the first step. So the calculation of normal profit, so average capital employed into NRR. So average capital employed ACE into NRR, I get the normal profit. Now we have the normal profit here and we also have the average capital employed. Now we have to calculate what is the super profit. Now the super profit will be, the adjusted profit for the year is 21,000 and the normal profit is 13,950. So the adjusted profit minus normal profit. So this will be equal to adjusted profit minus normal profit. So what is the adjusted profit? 21,000. What is the normal profit? 13,950. This is 7050. So the super profit is 7,050. Now I have to calculate the goodwill. Goodwill equals super profit into 3 years purchase. So I have the super profit. Now the goodwill will be super profit into 3, that will be 21,150. So in this way we have to calculate the goodwill. So first thing is, we have to calculation of capital employed. So all the assets minus all the liabilities, I get the capital employed. Then the next step is, I have the capital employed, I have to calculate average capital employed. So for calculating average capital employed, I have to make use of the profit for the year. What is the profit for the year? 24,000. So what is the adjustment to be made? Income from investments I have to deduct. So it will be 21,000. So this is the adjusted profit for the year, and from this I am taking half of it. So in order to calculate the average capital, so 1,50,000 minus 10,500, 1,39,500. Then calculation of normal profit. So normal profit will always be calculated on the capital employed, that is the average capital employed. So 1,39,500 into 10%, so 13,950. So we got the normal profit. Now we have to calculate the super profit, that is the adjusted profit minus normal profit. So 21,000 minus 13,950, 7,050 into 3, we are getting goodwill equals 21,150. So in this way we have calculated the goodwill at 21,150. Now the next problem, the balance sheet of Summer Sands Limited as on 31st December 2007 was as follows. Again, share capital is 1 lakh, P&L account 20,000, debentures 15,000, creditors 20,000, provision for tax and proposed dividend 15,000. So the land 84,000, furniture 5,000, plant 60,000, then investment 5% tax on tax-free government bonds 10,000, stock 12,000, debtors 6,000, cash 2,000, total is 1,79,000. Now, profit for the year after charging depreciation on taxes were 17,000, 19,000, 18,000, 20,000 and 19,000. So on 31st December, land and buildings were revalued at 95,000, plant and machinery at 71,000, furniture and fittings at 4,000. 10% represents a fair commercial rate of return on investment in the company. Find out the value of goodwill basing it at 5 years purchase of the average super profits for the last 5 years. So, they have given us the profits of the past 5 years. So, what are the profits? 17,000 plus 19,000 plus 18,000 plus 20,000 plus 19,000. So, when you add all this, what will be the answer? 17,000 plus 19,000 plus 18,000 plus 20,000 plus 19,000. We are calculating the average profits here. 17,000 plus 19,000 plus 18,000 divided by 5. So, I get the average profit as 93,000. So, 93,000 divided by 5. I get the answer as 18,600. Now, from this 18,600, I have to adjust the profits here. So, why do I need to adjust the profit? See, they have given the investment 5% tax-free government bonds 10,000. So, on 10,000, if I calculate interest, I get an interest of 500 per annum. So, that interest I have to deduct here. So, this from average profit 18,600, I am deducting the interest 500, I get 18,100. This is the FMP, or the future maintainable profit is 18,100. So, we have the average profit here, profit for the past 5 years divided by 5, 18,600. So, from that you deduct the interest. So, when you deduct the interest, we get the FMP as 18,100. Now, the next step is calculation of capital employed. All assets. So, what are the assets? Land, furniture, plant, stock, debtors and cash. So, we won't take investment into consideration. So, land, furniture, plant, stock, debtors, cash. Land, furniture, stock, plant, debtors, cash. Okay. So, what is the land value? Land is revalued at 95,000, plant and machinery at 71,000, furniture and fittings at 4,000. So, land value is 95,000, furniture and fittings 4,000, plant and machinery 71,000. Then, we also have stock 12,000, debtors 6,000, cash 2,000. 12, 6 and 2. 12,000, 6,000, 2,000. Debentures. Creditors, provision for tax, proposed dividend. Creditors 20,000. Provision for tax 9,000. 15,000. Total will be 59,000. So I'll just explain here. So the assets are, total of the assets is 1,90,000. The total of liabilities comes up to 59,000. So assets minus liabilities, I get 1,31,000. Now, in order to calculate the average capital employed, I have to deduct from this capital employed half of the FMP. So, in the previous slide, I had calculated the FMP. So, the FMP is 18,100. So, half of that I am deducting. So, I get 9,050. So, the average capital employed is 1,21,950. So, the adjusted profit, current year's adjusted profit I have to take here. So, the current year's adjusted profit I have taken. So, this will be 9,050. So, when I deduct 1,31,000 minus 950, I get 1,21,950. Now, the next step will be, we have to calculate the normal profit. So, average capital employed into NRR. Now, what is the NRR given here? So, the NRR is given at 10%. The fair rate of return is 10%. So, this will be 1,21,950 into 10 by 100. So, that comes up to 12,195. So, 12,195 is the normal profit. Now we have to find out the super profit. So, the super profit will be the FMP minus normal profit. So, what is the FMP? 18,100 minus 12,195. So, when I deduct this, I get the answer as super profit is 5,905. The super profit is 5,905. Now, I have to calculate the goodwill. So, goodwill is 5 years purchase of the average super profit for the last 5 years. So the goodwill will be 5,905 into 5. So, the 5 5s are 25, 5 9s are 45, 5 4, 5 5s are 25, 29,525. So, this is the goodwill. So, the way we have completed the valuation of goodwill as 29,525, or I can say that goodwill equals rupees 29,525. So, we have calculated the goodwill. With this, we come to the end of the session. Hope you have all followed it. Thank you.